Welcome to the Wealthy Bucket. In a previous video, we talked about the benefits of exchange-traded funds, or ETFs, and the differences between ETFs and mutual funds. They both have their benefits and disadvantages. In this session, we are sharing our thoughts specifically on ETFs, a fairly easy strategy on how to identify which ETFs may be better than others, and how to understand the core holdings of the ETF. We create these videos for investors for the purpose of financial literacy. We don't expect every investor to be self-directing their own investments. This does not mean that the investor cannot be a part of the decision-making process with your financial professional. At the end of the day, you, the investor, are in the driver's seat and should have some input and ensure that the portfolio created for you makes sense. Having financial literacy can save you hundreds of thousands of dollars in the long run. Let's start looking at a few ETFs as examples on how to identify which ones may provide better opportunities than others. We have selected the spiders for our examples. This is not a product promotion for this company, and we are not receiving any compensation from them. As you can see, the ETFs cover a broad range of sectors based on this pie chart here. When we run our mouse over the pie chart, the description box appears and illustrates the weighting of the sector within the S&P 500 and a quick blurb about the fund itself. The weighting of a sector simply refers to the percentage of the broad stock market or the S&P 500 that it is worth. Let's take a look at a quick and easy way of identifying which ETFs may offer an investor an opportunity. This exercise is only one of the few ways to identify ETF sector opportunities. By no means is this conclusive, and we're not stating that all other ways are incorrect. We simply want to share this with you as we feel it's easy and makes sense. Let's first start by selecting a sector ETF from the list. We'll start with XLF. Bring your attention to the chart here. The white line represents the broad market S&P 500 index, and the green histogram represents the performance of XLF, which is the financial sector ETF. Simply by using your eyes to measure, XLF has for the most part underperformed the S&P 500. Knowing that the market at the time of making this video is in an uptrend, this tells you that the sector is weak compared to the broad market, as the return for the sector is below that of the broad market. So when you're looking for an opportunity, do you feel it is more advantageous to identify a sector that is stronger or weaker than the broad market? Of course, there is theory that an investor should identify stocks that have been sold off and buy them back cheap. That can work as well. However, wouldn't it be more advantageous to wait for the cheap stocks to move higher before you invest? By doing this, you have more confirmation and confidence that money flows are returning to the stock, which increases your odds for success. Now let's take a look at another sector ETF. We'll select XLY, which represents the consumer discretionary sector. Notice the difference in performance between the S&P and the sector. For most of last year, The sector tracked the S&P very closely. Then around New Year's, the sector took off and has outperformed. This change in performance is related to sector rotation, which we will discuss in another video. Now let's take a look at XLE, which is the energy sector ETF. As you can see, the performance of the sector has significantly underperformed the broad market. Yes, the sector is cheap because energy prices at the time of making this video are fairly low. If the broad market continues to move higher and this sector stays at the same level, would buying the sector cheap be a worthwhile investment when your money could have been growing in another sector like consumer discretionary? Let's take a look at one more example. We're going to review XLK, which represents the technology sector. Based on the graph, the sector has pretty much outperformed the broad market for the last 52 weeks. Based on this quick exercise, you can now see where stronger opportunities lie when looking for stocks or ETFs to buy in an uptrending market. Sector rotation does play a part in assisting the investor on making market timing decisions. However, we will discuss that in another video. Now that we have identified two sectors that may be of interest in this exercise, let's take a closer look at one of them. Sticking with XLK, or the technology sector, we simply click on the Holdings tab to obtain a snapshot of the stocks that make up this ETF and their individual weighting within the sector. The weighting of a stock relative to the sector is listed from highest to lowest. Let's click on a few of the holdings in order to understand how to pick stronger stocks in a specific sector without having to own the entire sector. This exercise is very similar to the first one we tried earlier. We're going to start with Apple first. Take a look at the graph. You can see that Apple has significantly outperformed the broad market. Over a 6-month period, the broad market has returned very little to an investor if they had simply purchased the entire index or was over-diversified. Now let's try another stock. We'll select AT&T. When you look at the chart, you can clearly see that the stock has significantly underperformed the broad market or S&P 500 index. AT&T has a fairly large weighting within the sector and can be seen as a stock that is holding the sector back. Let's take a look at Verizon. Its weighting is also significant and is underperforming the S&P 500. Using the 3 stocks that we have reviewed, you can see that if these 2 stocks were removed from the sector or the weighting was changed, the performance could significantly be better. We'll look at one more stock for this exercise and choose Oracle. Oracle has for the most part outperformed the broad market. During the time that this video was made, simply owning Apple and Oracle would net you a larger return than owning the entire sector or broad market. Of course, there may be better and stronger stocks within the sector. We are simply illustrating an example of how to screen for good stocks in strong sectors. At Wealthy Bucket, we are promoting financial literacy and encouraging investors to be more proactive and understand what is happening to their money. Maybe you may not be the person who is pushing the buy or sell button at home or at the office, but someone else is likely doing it and making the decisions for you. Don't you at least want to understand what is happening to your money, be able to ask the right questions, and hold your financial professional accountable? This is your wealth, your legacy.